Today, good morning to all of you. Today we have assembled here to develop the conceptual background to investment. First of all, let me explain what is investment. Investment means sacrifice of some money, value at present, with the expectation to gain in the future. Following are some of the instances of investment of money. If the examples is if Mr. Ram buys 200 shares of Wipro Limited for rupees 750 per share, is a type of investment. Mr. Khan buys a piece of land with the aim to sell it in the future at an appreciation. It is a type of investment. Srimati Dipti buys 100 shares of Reliance Industry with the aim to sell these in the same settlement, a type of investment. Taylor and Company buy a plant for rupees 2 crores to set up a factory. It is a type of investment. Mr. Syam buys a ticket of playing with the aim of winning it. It is a type of investment. Srimati Leela puts 10,000 rupees in the post office saving bank account, the type of investment. So all these are the examples whichever we have stated here. These are the type of investment, and once we are talking about the investments are having some dimensions. There are 4 dimensions altogether there, that is element of sacrifice. Once you are investing, there is an element of sacrifice, element of futurity. Every investor is thinking that there must be their expected returns are always higher for a long term. So 3 different type of elements of futurity is there: short term, mid term, and long term. So expected returns are always higher for a long-term investment as compared to the short-term investment. And there is a third dimensions of investment. We used to call it as a element of risk. So element of risk means every investment altogether is having some risk, because the future is always full of uncertainty. Once the things are uncertain, so the risks are there. Some of the risks due to system-wide factors which are unavoidable, whereas other arises due to the specific performance of the investment avenues, which can be minimized through diversification. There is a 4th element, dimensions of investment is expectation of gains. Investments are not done for charity. The elements of sacrifice of current utility of money values, futurity, and the risk of loss of money values, all these put together become the basis for expecting gains from the invested money. Generally, the gain expected by the investors are nothing but the compensation for waiting, compensation for loss in purchasing power, and the risk premium corresponding to the level of risks. So you will find different type of investment. One investment is called pure investment. Financial investments are like exchange of financial claims, like buying of shares, debentures, purchasing insurance policy, investing money in a banks or post office, etc. While investing his money, an investor always has a certain objective in his mind. These objectives become the guiding force for the investment decisions. Generally, a pure investment has the following features. The features are: it is carefully thought of, it is well planned, it is well planned, it is based on a study of fundamental factors about the investment avenues, it is generally for a long-term horizon, it is assumed that expected return will be compensated with risk, low risk, or a policy of risk avoidance, and investors are those who do not tend to borrow money for investment purpose. So investors are those who have a risk aversion tendency. So these are the features. These are the features we have to keep it in mind to understand about the pure investment. Speculation is another very important terminology used in the investment management and the security analysis. So speculation starts where investment ends. Speculation is an act of investing money on the basis of market-wide information about the investment avenue, such as information about the trading of the share price or the trading volume of shares, traded volume of shares. The speculation is comparatively for the shorter duration. Speculation is based on the market-related information. Speculation is investor has an attitude to take risk as compared to risk aversion. Sometimes the speculation tends to borrow money for making investments with the expectation to gain more than has borrowed. Thank you. So, speculation has a positive attitude towards losses. How the brokers and investor speculates, that we will talk in the next class. How the brokers and investor speculates, because speculation is an act of investing money for very short duration. So that is very important part of the session. Next part of the session, we will talk about how broker and investor speculates. So with these words, we invite you to watch and see and join the session of the topic, which is pertaining to how brokers, investors speculates. Thank you very much.